Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 24th, 2015. This week, stocks gained, but may have ended the week with a shooting star candlestick, and we'll need to look at it for next week, see if we could get confirmation next week. TLT, the bonds, held support for now, and also municipal bonds actually hit another all-time high. Also, we'll look at preferred stock fund, which had a nice setup a few weeks ago. US dollar again falls below the 50-day moving average, and this, of course, relieved the pressure on various commodities such as gold, gold miners, oil, and natural gas. Okay, this is S&P 500 ETF SPY, kind of like a proxy for the market. So, um, basically speaking, I think that the S&P 500, the general market has entered the bear market sometime around here, following this rejection. Now you can look at some of my previous videos and I lay out the case for why I think that has happened, but for now I'm treating any kind of rebounds as a selling opportunities or shorting opportunities. So this week, of course, we had a relatively nice rebound. We had gained, I think, around 3% for the week. Now, Friday action is kind of interesting. You can see that we had a long tail out of the top, and this is, you can think that this may be like a doji shooting star candlestick. Now, by itself, it doesn't really mean much, but if we get something like a gap down on Monday, or maybe a continuation lower, then this could mean that we are the price is being rejected in this area. Now you can see that I also added to this chart a volume by price bars here in this area here. You can see that there's a big volume by price bar here right there at 206, 208 area. So we are actually right there, and this indicates that there's quite a bit of trading that occurred in this area, and this is an area of importance to S&P 500. This is a 6 month chart, but if we zoom out to, let's say, about a year chart, we can see that this area is still of importance to the S&P 500. So there is lots of trading that occurred in this area, and this is a kind of like an important area to watch for any kind of resistance or a potential breakout. The bullish case can also always occur, and we have to keep our minds open to that as well. Now let me just quickly show you the 5 minute chart of Friday. You can see it's very interesting. We had a nice, breakout here, and then it just completely fell apart in the last basically 5 minutes of the trading session. Here in the last 10 minutes, we still were above the opening price, which was right there, and then at the last 5 minutes, we basically collapsed below it. So I wonder what that means. Maybe there's some kind of preparation by larger companies to position themselves on the short side, or it's difficult to say because also the trading was, you can see this has been obviously shortened because of the holiday. So we'll see what it looks like on Monday and next week. Next is TLT, Long Treasuries Fund. So I think we had a breakout here a couple of weeks ago with a close above this resistance level and also above the sloping down line, trend line. So, and then we had some back and forth filling. Now there is support here. You can clearly see the, tails out of the bottoms of the candlesticks, and here as well, and here as well. So we have three touches here at support. I think we held the support for now, and looks like we rebounded on Friday. So I still think this is a bullish chart, and I would be buying the dips versus selling the rallies on this chart. You can see that also SCTR, Stock Charts Technical Rank, in this upper pane here, you can see it's basically above 90. So this fund is in the top 10% of funds, even compared to other stock funds and other bond funds. So, and if bonds are such good performers, then that probably, in my mind, it means that there's quite a bit of fear in the market, and market participants are rotating away from stocks and into bonds. Why that is happening is difficult to say, but the fact remains that it is happening. Next, I wanted to show municipal bonds, and this is MUB, National Municipal Bond Fund, actually hit another all-time high here on a Friday. Now, you can see that this could be a hanging man candlestick rather. A new high was hit and it sold off. So it's definitely overbought. This is quite a powerful move here from early November until now. So basically no discernible pullback. I think we might get a pullback to maybe 109 or maybe 109.32 area here. But the fact remains that this is a very much a bullish chart still, and if I was trading this, I would be definitely trading on the long side and not even consider short setups. Okay, so that's about bonds. One more thing I wanted to point out. So another fund, which is sort of like in between bonds and stocks, is a preferred stocks fund, is PFF and other preferred stocks. So, correlation-wise, you can see that it correlates a little bit more to S&P 500 than to the bonds in general, at the very least in the last 6 months. But if we zoom out a little bit further, so let's say to maybe 3 years out, then we can notice that it also correlates somewhat decently to general bond fund, and doesn't really correlate that well to S&P 500. So it's somewhere in between S&P 500 and the general bonds. So it's sort of like another asset class to consider when trading or when investing, is that it's a nice diversifier to your general holdings. And here at MasterChartsTrading.com, we actually took this opportunity, this oversold condition here, and we went ahead and opened the position here. So it's gaining already quite nicely. All right, so that's all I want to say about bonds and preferred stocks. Next, let's look at US dollar, and this is a daily index cash settle end of day price for US dollar index. So Friday we actually had dollar close below the 50-day moving average, this red line. So it looks like we are probably gonna head back down to test again, to retest the support around 97.20, $97, and this 200-day moving average. So for now the dollar is still, I think, in a bull market. We almost hit 52 weeks high here, and we pulled back. I think that if we hold support here, this could be a nice buying opportunity for a dollar fund. I don't normally trade rather currencies, but if it does hold in this area and rebounds, then this could be a potentially nice buying opportunity. But for now, the dollar clearly is under pressure past few trading days, and this has put quite a relief in many of the commodities. So let's look at some of the commodities next. All right, this is gold daily spot price. Excuse me. So we had I thought it was a clear breakdown here in mid-November with a close below this July lows, and then since then, really, not gold bulls nor the bears were able to kind of push the prices higher or lower. They were just kind of meandering above and below this breakdown level for the past basically about a month. Now, generally speaking, I think gold is still in a bear market, so I will ignore all oversold conditions and look for only overbought conditions to go short. Now, if we do get a rebound in gold, possibly to this 50-day moving average around 1100, that would be already most likely will be already a decent setup to go short. However, if we get a rebound even higher to maybe even 200-day moving average here at 1145, 1150 here, maybe even here to this resistance, quite a bit of resistance in this area here. So this could, the higher it goes, basically, in my opinion, the better the setup becomes to go short. Because I still don't think that gold has bottomed out really. This whole breakdown, I don't think has yet played out. I think this whole breakdown can still potentially push the prices down to around possibly even below $1,000 based on the measured move from height of these patterns here. So anyway, so I think that this could be a potentially nice short setup once we get possibly about the 50-day moving average or maybe even around the 200-day moving average. So next, let's look at GDX, the gold miners ETF. This one is, it's different than gold in the sense of we, basically held on to the support for uh, a few months now, and really we tried to pierce through this $13 and it just would not give up. So uh, certainly gold bulls, for them this is a very welcome sign. Another couple of things that I wanted to point out to gold bulls, and I just wanted to note that I'm not a perma bull or a perma bear in anything. I look at, um, I do my very best to look at the objective evidence at hand. So for now, I'm actually seeing a bullish divergence in the price of GDX. And here how it's playing out. So we have a lower high for now in the price of GDX itself, but looks like we have a higher high in advanced decline line and advanced decline volume lines. And also we have a higher high in the on balance volume. So looks like we have three indicators here that are pointing to a potentially higher prices ahead. At the very least short term. Where could this rebound continue to? So, of course, resistance level of 1473 here, and you can say that this is also a resistance level. So around here, 1473 is a good place to fail. Another good place to fail, of course, is $16 here from this peak, and also most likely by then the 200-day moving average will come in around there as well. And then, of course, this peak from mid-October at 1689. So same as gold, it's possible that we will, we have indeed bottomed out. The true bottom will be reached. We can only look at it in the rear view mirror, so to speak. For now, generally speaking, I think GDX is still very much bearish. And as long as gold is, bearish together with GDX, then as long as gold is bearish, GDX will remain bearish as well. So for now, once again, I'm not looking a long setups. I'm only looking at, for GDX to become overbought, and I would be considering a short entry again. So another commodity which is showing some sort of a signs of relief from weakening dollar is, of course, oil, and this is a daily spot price of oil, West Texas Intermediate. So we had a breakdown here in mid-December below this support from August. And then a continuation lower. Now, for now, looks like we're rebounding with this, within a bigger downtrend with a rising wedge. So rising wedge in a clearly bearish security is a bearish continuation pattern once the rising wedge is broken to the downside. And this is a very nice rising wedge right here. I actually pointed this one out a few months ago. Rising wedge and then a rising wedge break right there with a push lower again. Now, whether or not this will play out in the same way as this is difficult to predict. Of course, if the dollar finds support, I think oil will again come under selling pressure. Again, I'm not trying to pick bottoms. This is a bearish security, so I'm only interested in overbought conditions to go short. Some people, like to look for bottoming patterns. In my opinion, that's kind of dangerous because, bottoming patterns can unfold for a long time, sometimes many years. For example, if you look at coal, this has been many years that coal has been in the downtrend. As a matter of fact, let me show it to you right now. I wanted to show a chart of, let me see, where is it? Excuse me. There it is. This is BTU Peabody Energy. This is a coal stack, and you can see that it tapped out in 2011, and since then, basically, there was non-stop selling. So this trend in motion continues to be in motion. All right, next, let's look at natural gas. So natural gas daily spot price. Natural gas was clearly the biggest winner this week. I think this was about 18% rise just this week alone. So a couple of weeks ago, I pointed out this gap down. You can see it more clearly here, and I thought that this was an exhaustion gap or a selling climax of some sort, but I had selling climax question mark here. Now I did remove this question mark because this it was clearly filled here. Now again, if you're trying to pick bottoms, then you should be looking for signs like this, like a selling climax, but sometimes those gaps continue and there is no end in sight. So again, I was not looking to pick this bottom, and this is a kind of classic short covering rally. It just came out of nowhere, and people just covering shorts, and then prices pushed higher. This is clearly a counter trend rally because this is a multi-year lows, and I think back in 1999 was the last time we witnessed these prices in this level, in this area. Anyways, again, as with oil, I'm only looking for overbought conditions and to go short natural gas. Where could this, rebound take us? Most likely, at the very least, this 50-day moving average. And if it does close above it, then actually you could see that the last time it closed above it was here in August. Here it tried to close above it in September, but failed, and then just continue lower. So if natural gas does close above the 50-day moving average, that already could be an interesting setup to go short. If it pushes even higher to the 200-day moving average, then we'll look for even better shorting opportunities. Now, again, I'm not looking for big bottoms or time the entries on the long side here. All right, and that's it for the stocks recap. I just want to point out that this is basically a holiday season, so if you have made some money or if you just feeling charitable, do make some donation to a charity of your choice. So there's a decent site, Charity Navigator. You can check out various charities. You can also donate to various animal charities and or if you're Amazon, Save the Trees, etc., etc. So, anyways, stay tuned for how to find us on the website. But thanks for watching and have another great trading week next week. Merry Christmas and Happy New Year. Thanks very much. Bye bye. Okay. Okay, I also want to show you how to find us on the internet, so please go to MasterChartsTrading.com. We do have trade alert services which are live right now, and it's only $24.95 per month with a 3-week free trial. I think it's well worth the money, and you get timely alerts on when I go short or long whatever various securities. So I think this is a great value, and my clients have been pretty happy about them so far. We also have a blog here where this information that you're watching will be posted. Also, video section, same thing. You will see the information there as well. If you go to public charts and social page, you will see that we have this link here, public charts page, and this link will open and show the charts that you saw in this video. If you sign up for our mailing list, you get a special discounted price for our trade alert services. If you have Twitter, Facebook, YouTube, or StockTwits accounts, please follow us there as well. That's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye.